Hello, everybody, and welcome to the updates today. So, today we're going to look at some stocks which are doing well. Despite the fact that the market has been correcting or going sideways, there are some stocks which are, giving excellent momentum and returns. So, we are going to focus on some of the stocks which are doing really well and which have very strong momentum and are breaking out to new highs. So, one such stock is the high tech gears. You can see here the high tech gears. I'm looking at the monthly time frame. So again, as usual, we're going to look at the volumes. As you can see here, the volumes are extremely strong. So the volumes in the month of March was very good, and even right now, the month of April, the volumes are excellent. This is despite what we are seeing in the broader markets, the correction and all the negative news around. But still, the stock is excellent. And right now, if you can see, it's at the high point. It's actually at the peak. So this is a stock which I think it's possibly going to continue its uptrend. And if you just look at again on the weekly time frame, you will notice that it started its up move again from 450, 470 odd, and right now it's sitting at 949. This is within 4 to 5 weeks. So it's a very strong momentum, and this is the key level here that we are looking at. We are looking at this level. So this is a level where we would want the we would probably, if you get a correction, this is a level where you will probably expect it to take support. But if you just go into the daily time frame, you'll notice that it's just broken out again from a small flag consolidation pattern. So in my view, when there is something like this which is showing excellent relative strength despite the market being weak, I think it's a great opportunity, great signal to look at that stock. I think I wouldn't be surprised if this stock continues its rally even further from current levels. Now, from a technical standpoint, this low here, that will be the stop loss at 806. And because it's at the upper circuit, you probably will have to place an aftermarket order or a pre-market order, and it's quite likely that it opens and straight away goes and hits the circuit again, unless and if the markets were to fall. So watch out for that. Obviously the risk is 150 rupees, so you have to understand the risk. And like I mentioned, if you want to wait, then you can wait for it to come down. But there's no guarantees that this stock is going to come down. It's possible that it just continues to make new highs and it keeps going higher. So you have to make sure that maybe if you're looking at entering now with the stop loss at 800, then you have to manage your risk according to that. So that's for high tech gears. Now let's move on to the next stock. So the next stock is Manorama Industries, and as usual, if you will notice here, very strong volumes. This is obviously one of the first rule almost in stocks. You always want to look at a stock which is having very good volumes if you're buying it, and you can see that this stock has been showing excellent rally. And over the last few days, remember this is on the daily time frame. So the last few days, despite the market weakness, this stock is showing excellent strength. It's gone from 336 to 501. Now, if we just zoom out a little bit, you will notice that it made its top in October 2023. Now, post that, after the correction, this sharp rally that has come about, you will notice that this level here, this was a key pivot level. You can see this level was a key pivot level. So this was where support and resistances occurred, several number of times, and then it was basically playing between this range. And you can see that during the range, the volumes were lower, and this is when the market was very volatile. It was correcting a lot, and then last couple of sessions, excellent volumes, and it has broken above the resistance level. Now, anytime you have a good breakout after a consolidation, on high volumes, the probability of this continuing increases. So from a technical setup point of view, this is an excellent stock. I think watch out for this for the rest of the week. We have three more trading sessions. So I think this could be an interesting week if the market doesn't fall very sharply. Even if it does fall, I think it'll still outperform. There's a possibility it'll still outperform like what we saw today. But there's a possibility that this stock in the next couple of days, it might hit its circuit again. So watch out for that. So remember, none of this is investment advice. So please do your own due diligence, consult your own advisor, etc., etc. All of that caveats are there. Anyways, so let's move on to the next technical setup. All right. So compared to all the stock that we have seen till now, this stock, probably is a little less volatile, but nonetheless, in the last 1 month, the stock has also gone up gradually. And if I were to just look at it, on the daily time frame, uh, obviously, after the correction that we saw between Feb to March, and post that, you saw the markets again sort of starting to go back up. So it follows similar trajectory. But what's interesting is right now this is showing some serious relative strength compared to the market. And I think that's where that is a key thing that you'd want to notice. You If you see this 1609, it's broken over the previous resistance levels, and the volumes are pretty good as well on today. On the 1 hour time frame, you will notice that you get this big candle and there are some consolidation candles. So obviously during the second half, the market was falling, so this stock was consolidating. But I think if the unless until again, I keep saying this point again and again, but if the markets were not going to fall too much, or even if they were to just stay sideways, even if they have a negative, mild negative bias, I think that this stock will still do really well. Of course, if there's very aggressive selling, then then all the stocks do get a hit, do get hit. So but if you are looking at you know if you're looking at trading short term, or if you want to look at stocks intraday that you could trade perhaps, or even for a couple of days, if the market holds up, I think this is going to be a very strong stock over the next few days, given the fact that this is already showing excellent volumes. It's at all time highs. I think that will really make a difference. So I think this is another stock which is looking very, very good. Next stock that I will want to tell you about is Ingersoll Rand. And so Ingersoll Rand, as you can see here, it's again breaking out after a nice consolidation pattern. One of the reasons I really like this stock is, generally what happens is when there's a correction, the stocks, tend to fall a lot, etc. But if you notice here, this stock, just went horizontally. In other words, when the market was falling, this stock was going sideways or consolidating. There was relative strength. In other words, despite a poor market, the sellers weren't really willing to sell this stock. Now, if you see right now, that the volumes are excellent. You see the volume, you see this long candle, you see the breakout from the consolidation. Despite the fact that today was a weak day, I think it bodes really well for the stock. So I think this is a stock that you can look at. Again, it's a stock which is steady. It's a slow and steady stock, but again, because it's a slow and steady stock, in the current environment, which is very volatile, I think these kind of stocks can really help you have some safety in your portfolio, while at the same time giving you some returns, rather than just having excessive volatility, or just getting stuck with some stocks which are not really giving you the kind of returns that you would want. So I think from that perspective, this looks really good. I think it's worth having a look at this stock as well. Again, not investment advice, so do your own due diligence, etc. All right. So till now we have spoken about stocks which are looking very good and which are giving us excellent returns. Now we are going to look at some stocks where they have been underperforming the market or falling, but are at some important support levels. So the first one I would like to point out is Wipro. You can see here Wipro has, this is the key pivot level again at 443, and you can see that Wipro has come right at that level. Now, in my experience, this is a level that will definitely hold up once. Of course, it could get broken, etc., etc. But it's quite likely that we get this level holding once. And if you go back and you see what I mean, you know, somehow in these kind of stocks, in stocks like Wipro, I've noticed that the technicals actually work really well. One would think that, oh, this is a low beta stock, etc., and things like that. Somehow I feel maybe in stocks where there's less manipulation, technicals work really well. But anyways, that is just, it's got, I have no way of proving that. So anyways, if you look at this level here, this is a very strong support level. And if you see, once Wipro broke out from this level, went to 546, which was the previous resistance, it tested that, came back down. Obviously IT is in a very bad shape. So at this level, again, I would say that this is, I think, a very good entry level. There's a possibility that it turns around and goes back up, because if you see this entire rally, this rally has come on good volumes. If I just zoom in a little bit, you will notice that the volumes were good. And while obviously the last few candles have been very sharp, this has obviously come on the back of the resignation of the current CEO. I think there's a new CEO who has been assigned, and I think obviously that has contributed to the fall in Wipro. But I think at this level, looking at the previous support, I think it's a very good entry level on the charts. And I think I think from even a placing a stop loss perspective, you could place a stop loss at 426 and just go long. The possibility that we might just see a reversal from here. So this is for Wipro. Now let's go to the next one. So we are looking at Dr. Reddy's right now, and with Dr. Reddy's, if you notice, this was the key resistance level which has been broken. So the stock was at all-time highs. It made a nice continuation pattern, went up, and now it has been correcting slowly. So you will notice again that the stock is back to the support levels. Now these kind of levels generally for a stock like Dr. Reddy's or Wipro, these support levels they tend to hold up. And again, like I was talking for Wipro, I would say the same points even here for Dr. Reddy's. I think this could be a very good entry point for the stock. Now you cannot really predict how much it will go up. You can just look at a good entry point. You can see that the stops are tight. If you want to place a stop loss, you could place a stop loss just about here at 5,800, and 200 rupees stop loss, and you can just go long. You sometimes when a stock like this, which is broken out to all-time highs, corrects and comes back to the support, it can just bounce up and keep going higher. So you never really know that. So in terms of a target, I would say you could just hold the stock. Or if you're looking at a target, then maybe keep, at 200 rupees, that is at 1 is to 1, maybe take 50% of profits and let the rest of the, position run with the break even stop loss. That's also an approach that you can take. But remember, this is a low beta stock. So you're not going to get a rally which is, insanely fast unless until some triggers were to come by. But otherwise, tends to be a low beta stock. It's not a bad stock to have in the current environment. I keep saying that because like I said in my previous video, I think the markets are going to be very very nervous, and I think stocks like these, which are a good support, large caps, and I think where you can say which are low beta as well, I think they'll actually help your portfolio, help you make money in this environment, rather than some of the other stocks. So with that, I think I will just stop here now. We will just quickly look at the mid cap and the small cap indices themselves to get a sense of what is happening out here. So this is the mid cap index that you have in front of you, and it doesn't look very pretty. This gap here is a major gap. It's not a very nice thing, especially when it's occurring at a top. They in the past have tended to form, you know, a major top at these kind of corrections. So when you get a big gap at a at a high where all the momentum oscillators are extremely stretched, there's a possibility that you can get more correction and you can continue to get a lot more volatility. Now given all the news and data around, all the news flow around, sorry, and the elections, etc., I think it's quite likely that that could happen. And same with small cap index. Again, if you notice, what you will notice here is that mid cap index made a new high, whereas small cap index hasn't done that. And then after the gap down, despite the two bullish days, we are yet to cover that gap. Unless until this gap's covered and we break out to all time highs, I think there will be consistent supply, or by which I mean there will be consistent selling in some of these stocks. So you will have to be very stock specific, and you have to be very agile in this environment to be able to profit from the markets. With that, I would like to say my disclaimers. This is not investment advice. This is just my personal opinion. And with that, I would like to end the video. Thank you so much for watching.